investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Wednesday, the 12th of January. What we're looking at is the Dow is up 151 at 36,403. Is this momentum to the upside about to slow down? Did we have that torque, that turn at 35,639? About 1,300 points off the all-time high of January the 5th, 36,952. You can see here in the daily chart. So far, the daily chart is, the MACD's gone negative, but sort of flat but negative. Stochastic's very weak at 59. On-balance volume is very weak. And 9-period moving average is still holding nicely above the 14. That is a clue. And that's what I'd said. Before the 9 crosses negative under the 14, we could see a lot of choppiness. That's one of the reasons why I'm suspecting that this is a bounce within the context of a high that was made at 36,952.65 on the 5th, that probably in this particular phase won't be taken out before there's some kind of a test, at least of the 36,200, maybe even the 36,000 level. There's uptrend, up channel line that I'm showing you right here with the Chapman wave inside track propellant zone, and that's still working, and that's because the 9-period moving average is above the 14. Weekly chart, nothing to see here. Monthly chart, doji candle, like a plus sign, but nothing to see there either. So we're looking at the Dow going to be very, what I was thinking is that the NASDAQ-type stocks, especially the ones that were so beaten down, should have a chance at least a decent bounce. I'm calling it a bounce for now. I think a lot more work has to be done before they form some kind of a bottom that's a big tradable bottom. But in the meantime, what we are looking at is that the Dow is up 0.52%, about 0.5%. The S&P is up 0.67%. 2/3 up at 31 at 47.44. Very nice action at almost the high of the day. And what we're looking at here is at the low, we would go from 48.1868 all-time high on the 4th, peak F right in that inside track repellent zone, and you tumble down to the support level of 45.82.24. This is a really nice bounce. And look what happened. Just for 2 days, you got a pink. The 9-period went under the 14, and yet today it's gone back to L. Now, when you start to get this big choppiness, look at this, it happened right on the 20th or so of December after that very sharp pullback, all-time high 47.43 on the 22nd of November, down to the 44.95 low. I think it was the 1st of December, then the big bounce up, and then you come down and you start the up channel inside track propellant zone, run to an all-time high with 3, within 6 days you make 3 new highs, all-time high, 48.1862, tumble down where? Right to the support level, and now you've gone back. So therefore, then it went pink just for 1.5 days, 2 days, and then it went green. And now it's gone pink, and so far today it's gone green again. So that allows for maybe another 2-3 days of upside move. But this is going to be the really interesting thing. I want to finish up with the QQQ and the IWM. The QQQ has made lower highs and lower lows. I don't think that pattern is going to change just yet. So what we're looking at, this is a really good counter-trend bounce, but I'm treating it as a counter-trend bounce. Yeah, you can see the weekly chart. There's a little more depth there because the daily went pink. That means the 9-period went under the 14-period moving average. That's a big negative, confirms the sell mode. But you still got the 9 way over the 14 in the weekly chart, and certainly in the monthly, hugely over the 14-period moving average, although we did touch it at the bottom that was made at the 369 level just 3 days ago. Now, this is going to be important. IWM shows you the rotation that we've got. That you've got the Dow was the one that made its high, the latest, and then you got the S&P, you got the Qs, You've got the IWM way back in 8th of November, 244.46, tumbles down to the 210-ish area, 2209, spirals up to the 226s, can't hold it, and it's way back down. So this is the one that says in the rectangle formation, as long as you can keep holding that support of the rectangle, which is at about 207, 206, 207, that's going to be important. But if there is a tumble underneath, like you've just had in the dollar, I was speaking to Tom O'Brien last night about this in my interview, down 37 cents at 95.24, that suggests that now that rectangle is not a support level. It is now going to be a repellent zone for the Dow. So we're watching to see if the IWM at any point in the next week and a half or so actually breaks the maybe give it 2 weeks. Maybe let's make it January. If it closes under 206, that's going to be serious because you've now treated this whole area as very strong resistance. Now, what I really wanted to go to is brought up just a moment ago in the den. Folks, try to go into the den. It's really a fabulous medium. There are so many people with so many good ideas, just a plethora of ideas, and it's really worth it. So the one that was mentioned was EEM's breaking out. Yeah, the EEM, this is the Emerging Markets ETF. Let me just do this in the monthly chart. This is on the right here. Look at that. You got your sharp channel to the downside. Look at that. And it makes it nice. When you use these techniques, it makes it pretty, not simple, but visually easier to identify breakouts. And that says in the monthly chart, at any point in the next 2 months, if there is a close in the 52.50, let's call it 53 area, trading at 50.69, 200-period moving average in the daily chart is at 50.90, very strong leg C. MACD is good. Stochastic is now positive at 81%. You've got the on-balance volume starting to rally. You've got 200-period moving average, as I said, as resistance, and it coincides with the start of the Chapman Wave Inside Track Weekly repellent line. But this is good, and the reason why I say it's good, because if you look at the FXI, I was mentioning the other day, this is the first time that I'm seeing the FXI start to do a couple of things that are really important. That is the China large cap ETF, a big spiral from the low that was made at 35.20, was it 35.99 on the 5th. Here we are at 38.50. Doesn't sound like much. 3 points to the upside. It hasn't seen a 3-point move to the upside in a very long time. Look at the weekly. The last time was back in that rally that started back in October, went to the end of October at 42.70 from the low that was made on the week of the 8th of October at 40. So this is the first decent move. First time it's tackling the 14-period, let alone the 9, but the 14-period moving average since middle of November. So this is a good sign to say, this is what I'm saying. When people talk about crash and a 2 to 3 year period of going lower, I'm saying, I just don't see that for a number of reasons. And I am going to start talking about the coda aspect. That is the aspect that I talk about, where you have to talk about fashion, you have to talk about design, you have to talk about all the accoutrements that go to the Mozart period, where people wore those fancy things and wigs and all. We haven't quite got there yet. And I suspect before we get there, you're looking at the broker-dealer index, the IAI, spiraling higher, not at 114, but at 150. So I don't see it right now.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back, and what's really important is the Dow keeps trying to come back. It's up 171, S&P's up 32. Really nice action. What I did want to talk about is, can't talk over the music. Well, I don't remember what I said. Then I'm going to be talking about the coda aspect, and that really goes to the fashion. It goes to all the accoutrements. It's the period of excessiveness. I call it the period of excessivity, a term I coined back in 1987 when I wrote a big paper called the mega stock market still to come, I think it was. That actually I started in 1986, and then Barron's was very interested in the article. Kate Welling actually was the person that asked me and my partner at the time to elaborate on that. We wrote this whole thing. It actually is part of, it was here at TFNN. We had it up. It was a part of a book called The Psychology of Investing for Harvard Medical School. I was invited to give a talk. It was part of that as well. So the book is, I got it somewhere over there. Psychology of Investing, edited by Lifson and Geist, and I got a chapter in that. It was all those people that used to know, those people that went to all those different conferences. Cohen, what was the name? Cohen, and who's the Bond guy? Grant, all these guys had chapters. Anyway, so, and I just see that this is a continuation of that whole thing. The song that Cole Porter wrote back in 1932, 32 was it? Yeah. Anything Goes. I mean, we're in that area of anything goes. Not Bill Gross was there, but I don't think he had I don't think he wrote anything. Anyway, so enough with that. So VXUS I was asked about. That's the Vanguard Total International. Yep, nice move up, breaking out of resistance. In fact, this chart looks a little bit like, let me see, PTRA. I was asked about earlier on. PTRA is a little bit like it. Proterra Inc. common stock. So this is with buses. It's the electrification, the batteries for buses, commercial application. Had a real nice move up to that leg D. We were talking about that yesterday. Did break above resistance. I just think that this pattern is a pattern that usually takes time before there's a deliberate breakout and you can start looking at upward projections. Had a low in the sevens, I think, in the nines, and now it's had a high today, 10.27. Let me just give you the exact low. This is something to keep on your list, but you're really, timing-wise, this is really a long-term buy and hold, I think. 826 was the low on the 20th. It could even have a breakdown. These things take a long time. The evolution of, I talk about this all the time, the evolution of anything that comes, that breaks the century level. In other words, in the 80s and 90s comes the big breakthrough that gets developed at the turn of the century for the teens and the 20s. And then it takes a long time to mature. It takes, in fact, 20, 30 years after that. So infrastructure, electricity back in the 1800s, it took right into the early 1900s before the electrification, the network infrastructure was developed. So just think of that. Photography, automobiles, it just takes a long time. That's why I've been saying the batterification of automobiles is just going to take way longer than people think. It's only like, 3-5% of the entire production is batteries. It's going to increase. It's going to go exponential, but it's going to take a long time becomes the forefront. So these are things that take time. So, okay, let's get back into the story that we were looking at. We want to look at gold. Gold's had a nice move. It's just trying to break the Chapman Wave inside track repellent zone at 1824. I said if I can close 2 out of 3 sessions into the 1820s, that'll be a good sign, because that says, hey, now I can break above that high that was made at 1833 in the continuous contract on the 3rd of January. But in the meantime, really I should finish silver. And silver, this is a really nice candle for the first time. And now if I had to draw a long-term trend line, long-term meaning going back to November in the daily chart, from that high that was made all the way to here, you can see we're just about to break out of that resistance line. I'll get rid of this line as soon as it becomes history. I don't like to have patterns that are obsolete, and will be obsolete if silver starts to trade at 23.09, up 28 cents. If it starts to trade above 23.53, this will become basically a support level. Not only that, I can start to move the cup formation, stretch it out to a lopsided cup formation, and that's it. But the weekly chart says ho-hum, nothing to see. It's going to take some time. Let's look at high-grade copper, wow. Elizabeth. Look at that move. That is spectacular, up 3% in copper. Now, I said to subscribers this morning that I like to put copper and wood together. Wood is the iShares, the Global Timber and Forestry ETF. And I said, nice action, and it could go a little higher, and there it is. Leg E and the daily at 93.76. Now what's happened is this whole base that it was forming between 88.30 and 82.70, that becomes a powerful base, and you're looking at the chance that, wow, I have to tell you, I just don't see what people talk about. Maybe there'll be some form of a crash, but I just don't see it. I see the opposite. I think as soon as there are signs that we're coming out of this COVID-infested and highly vulnerable big cities time frame, I think we're going to start to see people looking ahead. I'll go there right now. I'm going right out of sequence that I wanted to do. And I'm doing it for a reason, because I like to do what's current. I don't want to go historically when things, it's just absolutely not important. Right now it's important that the global timber and forestry, together with the global copper, are starting to improve. It'll take time for the market to recognize that, but we've recognized it right now. And that says, that imparts news that says, wow, Disney, did I take a leap or did I take a leap? Disney is in the whole forefront of some part, probably a major part psychologically, if not technically, where Disney will be the inflection point to tell us, wow, people are starting to come back. Because why? It's at 157. If Disney starts to trade anytime in January, certainly in February, the cold month of the year for us here in Boston, in the 163 was the high, the 11th of November. If it starts to trade on a weekly basis in the 155, sorry, I didn't mean 155, I mean 165 area, it says, you know what? Put that immediately together with JETS. That's the U.S. Global JETS ETF, in other words, the airlines of the United States. If that is also trading, instead of 22 right now, is trading in the 2390 to 2450 area, I think that's telling us that people are going to be back. This summer could be very exciting. So those are things to look at. That's really what I wanted to say. Now we're going to look at bonds. As soon as I return, Basil Chapter, Dow's at 115, S&P's at 29.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, we're back. A couple of things I wanted to talk about. Questions within and Tiger, YouTube. Hi, Basil. Did you look at Platinum, George? Yes, I will. So Platinum having a very nice bounce from the low just under 900. It goes to over 1,000 peak D, and now it's pulled back, and it's kind of running okay. If you look at the weekly chart, this arch formation says it just takes a lot of work to make a second arch even greater than that. So for now, I think platinum is working well. Now, platinum is used for automobiles, batteries. This is already it's an important factor. But what I really wanted to say is that looking at the different materials, looking at the different areas, I suspect that platinum is waiting, and that the pattern itself, if I extrapolate time says that March, somewhere in the April to March, 3 months, somewhere in the March to April period, if before then it breaks above 1150, that's really impressive action. But I suspect that it'll be more like the later period, the first quarter, sort of towards the second, third months of the first quarter, that platinum, it cannot close under 850. I don't think it's going to. I think there's a really good support level, a close that is on a weekly basis. But I suspect it's going to be a little later on. And that, to me, goes together with what I'm hearing about the automobile industry. A couple of questions I had about Ford. So Ford, it's become the hot American company in the EV area, because you've got Tesla leading. Tesla's way off its high of 1243 back in I think it was November 4th or so. It plummeted down to the 800s, spiraled up to 1200s, 4 points. That's a huge move, 50%. Then what happens is it comes back all the way, and now it's at 1096. So I think that Ford is probably the next one, but Ford chart pattern is way more prettier than the Tesla pattern. So my thinking here is that, and I know this for a fact because one of the cars I've extended the lease twice now. I mean, this is unbelievable. They never do that. And in fact, I only got it as a lease because I love the make, and it does everything I want because it's four-wheel drives, and I got a load with beep beep bop bop, hip hip hop hop. It does everything, and the same model. If you can even get it this year in the 2022, the price is just out of the sky here. I mean, they've just gone crazy, and I'm saying to myself, I love this car. I don't do much miles. I mean, I love the car. I just keep it. I don't mind. And what happened is the company now actually pays part of the monthly fee, and it's much lower than I was paying. And they've extended it 6 months. And the person I was speaking to, JP Morgan, said, this is the first time ever that we're doing this, or at least very, very seldom do we do this, extend twice, 6 months, another 6 months. And the only reason why I got it as a lease in the very beginning is I said there are so many changes going on in the automobile industry. By the time I'm kind of done, I'll know much better what I actually want to buy and hold. And here we are in this crazy period. So I suspect, and so I said, when are the 2022 cars going to be coming out with a good product lineup that you got choices? And she said, they're telling me towards the end of the first half of the year. But then I had another report just immediately after that saying it could be later. So all I'm saying is that I think even looking at Ford, yes, it's the hot stock. You can buy it as, now you can only play it as a momentum stock, because even Ford is going to have fewer and fewer cars. So I suspect that this is the one you want to keep on your list and have a price at $24.30. If you've been long for a while, fantastic, because here's the rectangle formation working the exact opposite, where it breaks out above, comes back to the support level from the 2051-ish area back in, I think it was first week or second week of November. It broke it once to the downside, once to the upside, came back, held support, and now it's breaking out to the upside. So I suspect that the gap in the 22s will be filled, and at some point you'll be able to pick up Ford in the 21s, and let's look at it together. That's where you want to be looking at it. Oh, so in the den, I'm surprised they did that. I would think they want the car. Are you kidding? The car is worth, it's worth at least half its value. By now it should be down, no, at least half its value, at least 1/3 off its value. So it's worth 2/3. I mean, this is the most unusual thing you've ever seen in secondhand cars. I remember one other period back when I've always liked to buy secondhand cars. I know my cars, and I usually buy them, and they last me until I donate them to the local station, radio station. I love that, and I've been doing it less and less. But in this particular case, I went out on a limb and I said, let's have some fun. We drive to New York so many times, and let's have some. Of course, didn't do that much this last year. So, and I was surprised. Yeah, they did want the car. I just keep getting emails all the time about wanting the car. I'm not going to give them to them. There's nothing I could even buy close to what I can get for what I've got, top of the line of this particular make. So, no, I'm not interested. Anyway, I thought that's just platinum. I thought I'd just throw it in there. So a couple of questions I had. UNG, yes, I had this UNG on my list early yesterday morning, and then I thought, this is a tough one. This is United States natural gas, and it was acting okay, and I didn't do anything. And yes, we have a crude oil stock, and I don't know what the report has just gone about the U.S. Does it say in the den? Anybody tell me in the den what happened with the latest report? Usually we got Ruby. Oh, yeah, Ruby tells us. There it is. U.S. weekly oil inventory is coming up next with crude up another $1. Oh, so I don't know what they did. U.S. crude storage. There we go. Ruby, thank you. U.S. weekly EIA oil inventory is minus 4553K versus 1904K expected. So that's the storage data. All right, well, crude oil is responding. Let's see what it's doing here. And then we'll go to the... big move, up $1.34. At this point, I'm always a little late on this crude oil at 82.56. The reason why we still got our oil service stock is because I think there's room to play here. This is going high. So UNG, natural gas. I'm going to go to natural gas. Look at that move in natural gas. This is a whopper. It isn't that often that crude oil and natural gas go in the same direction. No, I shouldn't say that. Sometimes they go in the same direction, but it isn't often they go in the same direction with the same momentum. Most of the time, they're kind of trading sort of opposite one another. They're kind of almost in different worlds, and they are in different worlds. I mean, one is a crude oil that is used every single minute of every single day throughout the world, and the other is natural gas, which has this swing based on winter and all sorts of other things. So it's up. UNG is up at 4.6 right now, up 3.50. This is a really nice breakout. This is the pattern we were talking about, PTRA. Remember, Dan, if you're still listening, that's the move we want from a rectangle formation. A powerful move that just says, I'm even behind the 200 crude moving average of 4.27. Very nice move up. Now it's back. Crude oil has to tackle 4.9.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
We're always looking for that most identifiable low bar. Look, in this case, it hit the E-mini S&P, hit the 200-period moving average at about 940. Right there, boom, it goes peak A, peak B, peak C. We're always looking for at least 4 higher peaks to go from a buy signal to a buy mode. That's the qualifications that meet the full extent of the buy mode. And then at that peak D, you can go higher, you can go lower, but that's where other things can happen. Look what happens. Takes 3 bars, goes to an E, and then it plummets down to where? 200-period moving average. Then it has a rally off that, and that support then becomes, boom, resistance. And now we're down to 47.09. And that's the reason why I had a question earlier today saying, Basil, I agree with you starting a short position in the Dow. We waited a long time to get that off you. We just missed it back on the day of the high, and you're looking to add. But what about the counter trend rally? How high can it go? I just don't know the answer to that. I just see that this is a vulnerable market. It's a rotational market that you can't take anything for granted whatsoever. We've been trying to get a stock that is it should be in the sweet spot. Great company. Yesterday we bought it. We took a little bit of a loss. Today we bought it again, and we took another little bit of a loss. And they add up, but it's still pretty reasonable. And in the NASDAQ, it's just telling me, this is not ready for prime time. It's as simple as that. And you've got, Dow's down 16 right now. S&P's now only up 5. It was up 30 at one point. So this is a highly vulnerable market. I just didn't want to get carried away on the long side. We've got select long stocks. We've got core positions that we've got. Be careful. That's all I can say. Be selective. Have tight stops. And here's the thing that keeps me together with Wood, iShares Timber and Forestry ETF, together with high-grade copper. Here's another one, Schwab, which we had under 80, and then we took a profit because it suddenly pulled back for 1 hour, and then took us out, and then it ran from 80 to today's high of 94.70. What's with that? And I can tell you what I think is what's with that. It's the whole thing to do with the IAI, the broker-dealer ETF. We're looking at people very selectively coming back, and they're coming back in a big way. I would love to ask Kevin Hincks. I don't think he's allowed to talk about it, about TD America. I bet they're seeing a huge influx of people, lay people, who are now becoming really intrigued and interested in the stock market. Hood, this is the one that I said, don't touch, but we will be buying it at some point because I think this is the crowd that's going to get really excited sometime in 2022, and I think this is one that has the potential to double at some point. Does it double from 16 here, or does it double from 8 back to 16? That's not the point. The point is, it's that area in part of my coda phase is that as we go into all-time highs in various areas, the people will start to come back in. Those people that got really burnt, and this is part of the market process, the people that got really burnt buying the DocuSigns, etc., all the way down, it's going to take them quite a while to rebuild the capital to come back, but they will come back. And what do? They'll avoid the stock that they were in, but they'll go to something very similar. And this is what I'm saying. So right now we've got a very high level of uncertainty for a good reason. Rallies are, you just can't trust them at this particular point. Look at this question about live hogs. This is the lean hogs continuous contract stuck in the low range. But wait a minute, look at this. KC, which is coffee, nice cup formation, trying to get back in a cup formation towards the high that was made in the 250s. It's at 242 right now. This is going to be what we're watching closely because the stochastic hasn't got to 80%. The MACD is good, not great. The 9 period is above the 14. We've seen the double tops. How many times have we seen it? Non-related stocks and indexes, they go right back to within pennies. Look what happened to the dollar, to within pennies of the previous high. 96.94 on the 24th of November, tumbles down to 95.52 and goes back to 96.91, 3 cents away from the all-time high, not the all-time, from the left side high of the 24th on the 15th of December, and then it tumbles down. Now it's going to probably make a 1-to-1 to the downside, down 43 cents. And gold is not participating right now, but we want to see it sharply above this Chapman Wave inside track repellent zone. As soon as it starts to turn it into a propellant zone, that's going to be good. Question I had about, I wanted to do this. Look, EUR USD. This is the euro. The rectangle formation down at the bottom says it can go down below it once, and then maybe above it once, and it comes back into the rectangle into the middle, and then watch, because if it breaks above, it can do the 1-to-1 to the upside, and there it is at 1.14 for the euro-dollar currency pair. Weekly chart is horrible, but it's right at the 14-period exponential moving average, but we'll see, because if the euro starts trading it's at 1.142. If it can start to trade in the 1.145, 1.146 area, then all of a sudden it's tackling this ugly candle from the 15th of November with a high of 1.146. And that says it's taken this whole area and turned it into key support, at least in the shorter term. If you're looking at the USD JPY, which is USD JPY, this is the yen, dollar-yen currency pair, made a peak E in the daily chart at 116, around about 116.29, and now it's at 114.92, peak D in the week, and maybe at the end of the week, we see a peak D in the weekly chart. It says, hey, these guys have been spectacular, the dollar, US dollar, and the yen, and now they're taking a well-earned breather. They're below the peak that was made back on the 24th of November of 115.51. If you're looking at, I heard talk about the USD, the dollar, United States dollar with the Canadian dollar. Look at this, peak F top at 128, was it 29? 129.6, 1.296 on the 20th of December, trading here at 1.2510. This is a key support area. Breaks that, and you're going right down to the 10th of November, low of 1.238. So I'm trying to show you that this is what was working is suddenly not working, and when it not works, really not working, and we've got to be real careful. So a couple of things. A question I got here was, where did we go? IEF, EIF, IEF. Was that IEF? Yes, IEF, we were looking at this yesterday. For about a week or so, we've been looking at it. and we're looking at it with Earl, and now it's at 113.09. So that says, look at the T-bonds. It's the same pattern. Look, the T-bonds, this is the US iShares 20-plus year Treasury bond ETF. Look at that move. Peak, a trough D, and it turned up, but it isn't spectacular. It's in the rectangle formation, the big rectangle formation, and an arch formation, inverted V, in the weekly chart. And that just says to me, TNX, I think we're watching this, and it's a peak D in the data, in the 10-year note, but it's holding really well. I think this is going to go a little higher. It might pull back a little higher.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, before I hand you over to Larry Pesavento, coming up at 11:06, trade what you see. Let's just, it should be a great program. This is a perfect time for a Larry show. I'm sure there are a lot of things that he's going to talk about that have had big moves. Looking at GE, so a question came in here. GE, let me just see, what does it say? It says GE, just GE. And another point you're missing, the Federal Reserve has stated they're going to have 4 rate increases this year. The stock market has never seen 4 increases in 1 year before. So I don't remember that as well. That's interesting. Interest rate lesson coming up. And then right now, he said, this is yesterday, there are more stocks that have corrected 50% or more than any time in history of the stock market. That's not healthy. Gee, I don't know about any time in history, but that is something to take note of. So GE, leg D, comes out of the cup formation, pushes over the 200-period moving average. The 9 is above the 14. MACD is good. Stochastic's flat. And that's the reason why you've had these 6 candles above the 14 period holding steady. But with the flat stochastic at 87%, that on-balance volume says there's not really enough power to push it much higher. So I like GE looking out for 2022. I suspect this consolidation will continue a little longer. I wouldn't be surprised if, when and if you start to see GE trade again above 109.50 into the 110 area. This time it'll go right to that 115s that was the high, and we'll see it closely. But it needs to hold. It's at 102, 94 to 92 is really important support in January going to February. But yes, looking out, I think it's turned the corner. Now, a couple of things. As we're about to go to the break, VIX index. VIX index is down at 1850. Watch this closely. If the VIX index actually goes under 18 again anytime today, and the market starts to down at up 30 right now, actually starts to get to a plus 50, S&P gets back to a plus 12, I think you're going to get another bounce buying later on. But be careful, because if the VIX starts to go to the 18 area,